I think what we saw in the first quarter were just the businesses that people felt in terms of platforms that could outperform if there was an earnings slowdown or potentially a recession. Those groups outperformed. They drove the market higher. Now the fears of recession seem to have passed. Feeling better about trade, feeling better about where interest rates are. They're not spiking anymore. I would say we're calmed down. Therefore, broadening the market is what's going on. So financials are a recipient. People are buying who've been on the sidelines. Anybody who's been saying we're going to have a recession and we're really worried about that missed out. They missed out by 22%.
It's short-lived, though, as long as, okay, if rates can stay where they are right now, maybe they back up even further. I could see the financial trade working.
Yeah.
But there's no evidence that that's going to happen, is there?
No, but they don't have to move far, right? They don't have to move far. If we're not in a recession and businesses sort of as we're going with the second half getting better, I think that can help all groups and definitely will be better for financials than what people expected.
Doc, what are you watching today?
I was trading Signet Jewelers. I was trading GameStop because of a big move that one made, Judge.
That was an ugly move.
That was an ugly move. I'm buying that one. GME.
I mean, their guidance was just downright horrific.
I agree. And I'm doing a scalp in there. I'm not even trading options on that. But those are two stocks that I'm trading. As far as options, Pete talked about chips. We'll hit that in a minute. That is where the real action is here, Scott.
SMH is on pace for its fourth straight day of gains for the first time since Feb 15th.
And I don't know how many people came out and told us, and obviously some people even downgraded the likes of Micron and so forth. And that one is moving higher, strong right now. Again, we'll get to the chips in a sec, but take a look at Facebook. Facebook's up over $4 again today. They just keep buying upside calls. It's trading 3-to-1 calls to puts in that one. That's a strange ratio, very bullish for Facebook, and it's just surged. Then you look at it's up 34% year to date. Microsoft's up 18%, up another 1% today.
Yeah, Facebook's up 2%, 177.
Yep. And Netflix, how many times have folks on the desk, not you two, but other folks told me, oh, Disney's going to eat their lunch. HBO is going to eat these guys' lunch. They are not willing to spend the kind of money it's going to take to dethrone the king.
Why can't Disney work? I mean, Disney got upgraded yesterday, $150 price.
I saw that. And it can work, but to John's point, that is going to be a major competition.
One doesn't have to work at the expense of the other.
No, not necessarily. Right. But I think it's going to be tough because they're going to have to really. Obviously, they provided to Netflix, right? I mean, and that is ending.
And get revenue from them.
Right. But when you look at Netflix, Scott, I mean, they still have the moat, and they still have the international expansion that's just still in the infancy stages of where it really is. And I think a lot of people just discount that and don't really understand it. But they have been growing in the international markets, and I think that continues in a much faster way.
Well, look, and it's not just those names. Across the broadcast space, you're starting to see a pickup. You're looking at CBS and Viacom starting to perform as well. So it is this continuing broadening out. And, we started talking about tech, Scott, but there are ways to bottom fish here. And I did this going in a different sector, healthcare, CVS earlier this week. I mean, with everything that's been going on, Medicare for all, there's this supposition that the healthcare industry, that insurance is going to go away. That's just not reasonable. It's not fathomable. So the beatdown in CVS is an opportunity to play that irrational expectation.
How about